University of Durham. She is in the Durham Law School as associate professor, and she's also the director for international development. Her research lies, and this is so wonderful, beating a kindred spirit. Research lies at the intersection of financial law and regulation, technological innovation, and sustainable development. Pereira holds a D.Phil, an M.Phil, and a Magister Juris from the University of Oxford, as well as an MSc in Law and Business and an LLB in Law from Católica Lisbon School of Law. And before joining Durham Law School, Clara was lecturer in financial law at the Dixon Poon School of Law, which is at the King's College in Oxford, or King's College London. Yeah, not to confuse the two. She was also a stipendiary lecturer in tort law at St. Catherine's College, University of Oxford, departmental lecturer and tutor in company law at Oxford Law School. And during a D.Phil, she was tutoring company law, tort law, and contract law at various Oxford colleges, as well as guest teacher in international financial law and law of business associations at the London School of Economics. But Prof. Bandra, she's actually not only intersecting the fintech law regulation and innovation part that we are pursuing, but some of you might have realized that these other connections with her as well. She's been a visiting scholar at Columbia Law School. I've counted so many, except to say I know there's also Max Planck Institute in Hamburg, and there's was also an interesting one, the Mackenzie University in Sao Paulo. And I hope that very soon you'll also add the Faculty of Law at University of the Western Cape in South Africa to your list. Before joining academia, she worked as a capital markets lawyer, and she still does occasional work as a consultant, having previously worked with the World Bank and ICF. So, ICF. So a true engaged scholar. Welcome. We're looking forward to your lecture.
Thank you very much indeed for the invitation to be here, and thank you for everyone attending. It is a real pleasure to be here. I mean, I've been introduced. I'm a bit of a nerd. I love looking at sort of the intersection between law and technology. That's what I did my PhD on, the use of algorithmic technologies and AI in trading in financial markets. And these are the sorts of interests that I've been pursuing after my PhD as well. And most recently, I've been looking at open finance. And this is very much a project with a comparative law angle. So I've been interested in discussing open finance developments at different jurisdictions that I visited as part of this project. So I spent a bit of time in Austria at the University of Graz, kind of looking at what the European Union is doing in this area. I've also spent some time in India, in Brazil with our partners at Mackenzie University. We're developing a broader project on the impact of digital technologies on inclusion, including specifically financial inclusion. So today I'm here to talk about the UK's transition from open banking into open finance, the role of open finance and the role of this transition in terms of financial inclusion, and more specifically, I'm looking at reciprocity in the context of open finance. So I'm looking into the question of whether data sharing in the context of an open finance framework should be reciprocal, should go both ways. And I'll explain in a bit more detail what that means during the presentation. So the idea with this presentation, we'll start by looking at a lot of these concepts, which are somewhat new. So we're going to look at what open banking is. We're going to look at what open finance is. We're going to look at the UK open banking framework. We're going to look at the role of reciprocity, both in the UK open banking framework and in the UK's transition into open finance. And I'm going to finish with a few proposals now that the UK's, it was unfortunate. So the FCA, the UK's Financial Conduct Authority is looking into having the UK transition from open banking into open finance, and they actually are holding a policy sprint at the end of the month, which unfortunately, which I was invited to attend, but which I will miss because I am here. So that was somewhat unfortunate, but I have been in dialogue with FCA for the last couple of years about this transition from banking to open finance. And I will share some of my what are some of my proposals in terms of the role that a reciprocity principle can play in terms of seeing the UK transition from open banking into open finance. So first of all, what is open banking? Open banking is a set of technologies and standards where you have financial institutions, and that's typically banks, share banking data with third parties, and these are typically fintech companies at the request of consumers. So I drew a little scheme that helps illustrate the flow of data. So obviously when you open a bank account, right? So I'm talking now about the relationship, your relationship with your bank. When you start a relationship with a bank, typically you share a lot of personal data with that bank. And throughout that banking relationship, lots more data will be generated as well. You might then at some point also start the relationship with a smaller fintech. You might download an app on your phone, start a relationship with a fintech that provides you with different financial services. And I'll give you an example in a second. And within the context of that relationship, you might wish to have your banking data, so the data you've generated or that has been generated about you in your relationship with your bank, you might want to share that data with this fintech company with which you're starting a new relationship. And so in an open banking ecosystem, a consumer might consent to sharing banking data held by the bank with this fintech. So the fintech can then ask the bank for data, and the bank needs to share the data. That's the basic idea with open banking. Now, very often when I talk about open banking to people, they get very unnerved, you know, because usually when we talk about data, the concern is very much, how can I keep my data protected? How can I keep my data private? That's very often the discourse we hear around data, and open banking seems to be the opposite of that, right? It's about sharing data. Usually we care about data privacy. Why would you want to have your banking data shared with third parties? And I'm going to give you a simple use case. So let's say that you have multiple accounts with different banks, and you want to have a clearer view of your financial situation. Maybe you're struggling to keep track. Maybe you have your mortgage with one bank, you have personal credit with a different bank, you use a smaller bank. So for example, I use Monzo, which is a small, started as a small UK fintech. It has recently been authorized as a bank, but it started just as a small fintech. I would use Monzo because whenever I was traveling, I would get better rates. And also I had this nifty app that showed where I was spending my money. So I would, you know, occasionally transfer money from my main bank account into my Monzo. So you might have different bank accounts with different banks or with different proto banks or with different fintech companies. Open banking can help someone in this situation that's struggling to keep track of their finances just because they have different accounts and different agreements with different players. So if you wanted to take advantage of open banking in the UK, for instance, your starting point would be potentially the open banking implementation entity's website. So you could go on this website. This is a screenshot from the website that allows you to start your open banking journey. You can select whether you're a consumer or a business, for instance, and if you're a consumer, you can select what you want from that open banking. So one of the things that I ticked as I was kind of simulating an open banking journey was a bank account aggregator. So exactly this service that I mentioned, a service that allows you to have a more holistic view of your financial situation. And one of the apps suggested by the open banking implementation entity in the UK, so one of the fintechs included in the open banking ecosystem in the UK, is this entity called Money Dashboard. So you click on Money Dashboard. Money Dashboard is basically this app, right? It helps you track your spending across multiple accounts. You can set targets for saving as well, see how much you're spending. Here, I mean, this is not actually a screenshot from my own bank account, I just bought a house, so I wish I had 4,000 pounds on my bank account. Like, it's truly miserable. I just spent all my money buying a house, so I'm now completely depleted. But I can certainly relate to the overspending on coffee that you see here. But yeah, it gives you a sense, right, of where you're spending and what you have. There are other examples. You have apps, for instance, that might help you avoid overdraft charges by enabling automated use of other sources of funds. If you have other sources of funds, annoyingly, right, you might try to pay with a card and you might go into overdraft. But if you have funds elsewhere, you can have an app that automatically uses those funds. You can have apps that, for example, help customers automatically transfer cash from lower interest rate accounts to higher interest rate accounts. We've all been guilty of this, right, of having money parked that we're not using to its full potential because, life is hard as it is, and sometimes it's difficult to sort of micromanage all of these things without the help of a financial advisor. You can have apps that give you these sorts of services that help you identify products and services that are better suited to your needs. And this might be particularly important for underbanked customers, for customers that don't have a very complete relationship with their bank. Let's say they're underusing, in a sense, the potential of the financial system. So in that sense, open banking, and we'll talk a little bit more about that towards the end of my presentation, but open banking can play an important role in financial inclusion, defined as access to useful and affordable financial products and services by individuals. And we'll talk a little bit about how open banking, and in particular open finance, has a role to play here in terms of financial inclusion. And you'll see how, countries like Brazil, where I spent a bit of time, have actually fairly developed open finance frameworks and fairly ambitious financial inclusion initiatives. And it's not a coincidence that you see both things in the same in jurisdictions that make financial inclusion a priority. And like, for instance, the UK, for example, it does acknowledge the importance of financial inclusion, but it hasn't made it an explicit priority. Very recently, the UK revisited or had a bit of a discussion as to which should be the regulatory goals and objectives of its supervisory system and its sort of financial regulation framework. And it specifically looked into whether financial inclusion should be made an explicit goal of financial regulation. Ultimately, it decided against that, but it did add a new secondary objective, which is an objective of competitiveness and growth. So it's sort of different focus in different countries, whereas in Brazil or in India, financial inclusion might feature as an explicit goal for regulators. So the thing is, right, this is all useful, this is all wonderful. Why haven't banks historically provided these services, right? Why do I have to resort to a fintech? And it's actually changing, right? Nowadays, your traditional high street banks offer you much better apps and much better integration and much more interesting services, but it's partly because they have been forced to do that by these new fintechs entering the scene. Historically, they haven't provided these services, partly because the banking sector is a sector where there's typically a lot of concentration of market power in the hands of few players, so there's no incentive to compete, or not as much incentive as we would like. There's limited transparency, tight control over consumer data. Consumers have difficulty making comparisons between different banks and different services, and that's partly because, there's different factors explaining this. Obviously, this is also connected with the financial education problem. There's low levels of shopping around and switching. Typically, you might open a bank account in the same bank where your parents have a bank account, and typically customers just stick with their bank throughout. So there's not a lot of shopping around and switching. There are barriers to entry and expansion into the sector. Obviously, getting a banking license is quite troublesome. There's a lot of compliance requirements as well. So it is a sector with high entry barriers. So really, in the UK in particular, open banking is a story about competition. It's a story about identifying a competition problem and facilitating competition by fintech companies that were providing services that banks weren't providing, even though there was potentially a need for these services. So the idea with open banking is that with the right rules, it will not be, or it's not about consumers losing control over their data. It's about consumers taking ownership over their data and making sure that their data works for that. But obviously, I mean, that is a little bit of a, that's a tall order, right? It needs to be, we need to think about what the right rules might be. And it's been super interesting seeing how sort of different countries have followed different approaches to implementing open banking. In some cases, market-driven approaches, in other cases, mandatory approaches, in other cases, hybrid approaches. There's all sorts of variety across the world, depending also on the political priorities of different countries. And surprisingly, banks might not love the idea of open banking. We've seen that this is open banking historically, right? And certainly in the UK has been a means to sort of introducing more competition for banks. So in the US in particular, open banking was very much being driven by a market approach, was being developed through the market, no mandatory rules, so it wasn't really developing really. And there's been sort of a change of heart, and banks aren't particularly happy about it. But policymakers around the world have mostly begun to embrace mandatory approaches to open banking. The UK sort of pioneered the adoption of open banking globally. I mean, that is certainly the UK's view. There could be some discussion about that because obviously the development has been somewhat staggered, but the UK is certainly one of the most important jurisdictions when it comes to open banking. The next logical step for the UK is not just open banking, but open finance more broadly, which essentially involves extending open banking like data sharing and third-party access to a wider range of financial sectors and products. But we are very much still at the stage of transitioning from open banking, where the UK was an early adopter, to open finance, where the UK is still trying to figure out how to make this transition. The UK's Financial Conduct Authority is currently in the process of identifying the best regulatory strategy towards open finance, given both the benefits and risks inherent in open banking. I was part of a tech sprint on open finance a couple of years ago. This week, yeah, it's this week, right? The 31st of March, kind of end of March. It's this week, the FCA is organizing another policy sprint where basically they invite some academics, that's my case, but also industry representatives, tech developers. They kind of bring them all into rooms, they put us all into groups, and we kind of work through policy problems. And it's, you know, it's 3 days of super intense work, and then we kind of present our solutions to one another. There's a lot of discussion. The FCA, it should be said, has had a number of very interesting initiatives in terms of making sure that it maintains this kind of dialogue with the industry. So not just through these tech and policy sprints, but also through things like regulatory sandboxes, for instance. So they're quite keen to understand how the technology is being used before regulating, partly because they've also been explicitly sort of mandated to take into account competition and economic growth objectives, right? So they're quite keen on regulating, but not regulating to the point where competition is affected. The EU had a later start to open banking compared to the UK, but it is at this point considering a proposal for a framework for financial data access for open finance. So the EU started a bit later than the UK, but it sort of is now potentially more advanced when it comes to the transition into open finance. This is what I could get, but I mean, you are the experts, but this is what I could gather in terms of what's going on here in South Africa. I could gather that the Financial Sector Conduct Authority issued a series of policy recommendations supporting mandating open finance in the future. Recommendation number 1 is participants in open finance should be regulated, and the mandatory approach should be implemented. And this is very much what we see around the world. So even countries that have historically had market-led approaches, even hybrid approaches, are sort of leaning more towards these mandatory kind of top-down approaches that we see in the UK or in the EU, or you know, in Brazil, for instance. So what will the UK open finance framework look like? The starting point for this framework is the open banking framework, which doesn't mean that one will disappear and the other one, when the other one comes about. It's not about the UK open banking framework being replaced by a UK open finance framework. It's likely that they will both overlap. But in any case, open finance is seen as a development of open banking. So it's very much based on a model of open banking that the UK sees as quite successful, and which the UK sees as having been a blueprint for other countries as well. The key elements in the current open banking framework are the Payment Services Regulations 2017, which originally transposed the EU Second Payment Services Directive. We also have the CMA. The CMA is the Competition and Markets Authority. Again, open banking was very much seen as a competition law issue, as a competition issue in the UK originally. So we have the CMA Retail Banking Market Investigation Order 2017, which essentially requires the 9 biggest banks in the UK and in Great Britain and Northern Ireland to develop API standards for read and write access. And we have the Open Banking Implementation Entity with its standards and guidelines. So that was the website that I showed you earlier. How do we go from open banking into open finance? Obviously, there's differences in terms of changes of scope, going from just banking to finance. At the same time, in the background, there are significant differences in technology. I mean, when you think about 2017 and now 2025, it's not hard to see just how much technology has evolved. So that's a really important change to keep in the back of our heads as well. In terms of differences in scope, obviously open banking was initially limited to personal and SME banking. It was then extended to payment accounts. Open finance will need to have a broader scope. So we're talking about a wider range of financial sectors and products, things like pensions, insurance, and so on. Differences in technology, obviously technology has also evolved since 2017. There are more sources of data, better data analytics. There's more sophisticated algorithmic technology helping deliver personalized products and services. I'm thinking now about AI in particular. There's better disintermediation technology. I'm thinking distributed ledger technologies in particular. So the FCA basically needs to consider a series of key regulatory questions. Who should take the lead in developing and applying this new open finance framework? Do we need a new entity? Is it the OBIE? What happens here? Who should take the lead here? When and how should the transition occur? Should it be something that happens, overnight, or do we want a staggered transition? And these are all questions of process, but we also have a series of questions in terms of substance, right? What should be the scope of the new framework? What kind of data should be shared? How should data sharing occur? And the question that I'm interested in, and the question that I'm currently writing about, so I'm working on an article that looks into one particular question of substance, which is in this new open finance framework, should we have a principle of reciprocity? So that's kind of my research question for this paper. As the UK transitions from open banking into open finance, should it adopt a reciprocity principle? Reciprocity is basically, when I talk about a reciprocity principle, I'm referring to reciprocal data sharing. In the sense that every participant in the ecosystem is required to have systems in place for sharing data with the other participants in the system. When I talked about open banking, it was all about banking sharing their data with fintechs on a non-reciprocal basis, right? It's about the biggest banks being forced to share data with smaller fintechs upon consumer request. A reciprocity principle would basically require reciprocal data sharing. So not just banks or financial institutions sharing data, but also these third-party providers, these fintechs in particular, sharing data back. Couple of prior questions before we can look at whether a reciprocity principle could be implemented in the context of open finance. How is participation handled by the UK open banking system that we currently have in place? How might it change in a future open finance framework? There are basically 3 key participation issues when you think about an open banking or an open finance framework. The first is which categories of participants are you going to have in the system? The second of all is whether you're mandating participation in the system or whether participation should be voluntary. And the third question is reciprocity, which is the one that I'm interested in my paper. But just to give you a bit of background, currently in the UK open banking system, we have account providers. These are the participants in the system that provide and maintain payment accounts for their customers. These are typically banks. Then you have third-party providers that provide new services that make use of the data held by the account providers. These are typically fintechs. And then you have technical service providers that basically provide kind of they do all of the data plumbing. So they connect the system basically. In the UK open banking framework, we have mandatory participation again by the 9 largest banks in Great Britain and Ireland. These account providers are bound by the standards published by the open banking implementation entity. They're required to build and provide the capability to exchange data and initiate payments with authorized third parties. And other entities can apply to become account providers, but crucially, they might just want to apply to become third-party providers who are regulated, but crucially are not required to share data in the same way that account providers are. So they're regulated, but not required to share data. So again, no reciprocity. The UK open banking system is not currently subject to a principle of reciprocity. So the key question is, moving forward from open banking to open finance, do we want data sharing to become subject to a principle of reciprocity? The FCA seems very open to it. And we see this in other jurisdictions as well. The FCA, not so recently, this is actually 2021, but it stated that open finance will best flourish if the right commercial incentives exist for firms to invest and participate on a sustainable and probably reciprocal basis. So there's some openness to implementing this principle of reciprocity. What might be the source of indecision here? I've sort of summarized a few arguments in favor of reciprocity and some arguments against reciprocity, which explains this indecision, because it's not that straightforward that reciprocity should be implemented. I will also make the argument that things have changed in a way that probably makes reciprocity advisable in an open finance framework in a more obvious way than it would have been in terms of when the UK was implementing its open banking framework. So one key argument in favor of reciprocity is an unfairness or a balance argument. Essentially, the idea that certain players, in particular banks, might fear that might feel that they are being treated unfairly because they are required to share data, but no one is required to share data with them. So there's an element of unfairness or a lack of balance. There's a competition argument. Obviously, open banking is meant to increase competition, but a lack of reciprocity could, in addressing a lack of competition, create other competition problems. So obviously, when you think about banks competing with small fintechs, you can see that you need to probably help these small fintechs. But when these small fintechs become bigger, or when you have big techs like Meta or Apple entering the arena, then all of a sudden the equilibrium might have changed slightly. And by having one-sided data sharing, you might be creating other competition problems while trying to address the first competition problem. There's also a financial inclusion argument. Increasing the number of participants with data sharing requirements means that there's more data being shared about consumers, which might be particularly important in terms of, first of all, including people into the system and making sure that the right products and services are being recommended to the people being included in the system. There are also arguments against reciprocity. There's an uncertainty argument. True reciprocity applicable to all types of data could unduly extend the scope of an open finance framework into an open data framework for which we might not be ready at this point. So it might just mean that too much data is in circulation, that the boundaries of the system are difficult to define. So that's one problem created by reciprocity. And one problem that Australia, for instance, is addressing by having a very staggered approach to open finance, or to the transition from open banking into open finance. There's an incentives argument. Obviously, if you have smaller fintechs share data as well, they will face compliance costs that they might not be able to withstand. There might be a less incentive to search for information if you know it needs to be shared. So there's an incentives problem here. There's a systemic risk argument. Reciprocity increases the connections and interdependencies between different players in the system, which could create pockets of systemic risk. I mean, obviously, data circulation is wonderful if true information is being circulated, but mistakes can travel just as well as truthful information can travel as well. And then there's the obvious privacy argument, right? If you have more data in circulation, if you have more data being shared, obviously all of these schemes hinge on consumer consent, but we all know that consumer consent has its limitations, right? Obviously, more sharing of more data could stand as a threat to consumer privacy, lack of true consent, cybersecurity issues, operational failures, and so on and so forth. How do these arguments change in the context of open finance? And that's kind of the argument I make in the book. I revisit these traditional arguments for and against reciprocity in the context of open banking. I revisit them in the context of open finance to see that now that we're transitioning from open banking into open finance, should we actually include the principle of reciprocity? I think that these arguments change in two main ways. The inclusion argument in favor of reciprocity is much more powerful in a world of technological innovation, particularly in big data analysis, where this data could actually be used to ensure that more people are being brought into the system and are being given better products and services. The fairness and competition arguments in favor of reciprocity, I think, are also much more powerful in a world where small fintechs are not so small, many of them are not so small, and in a world where big techs are entering the financial services and products arena as well. I also address arguments against reciprocity by arguing that although reciprocity does increase interdependencies and interconnectedness within the system, it also opens the system to more consumers. So it also allows for the diversification of customer portfolio. So, you know, on the one hand, yes, there's a systemic risk argument, but on the other hand, by bringing more people into the system, you're also diversifying. Reciprocity creates immediate uncertainty, but open finance can be implemented in a staggered way, which partly addresses this concern. I think, obviously, reciprocity can increase compliance costs for smaller fintechs or decrease incentives to search for information, but instead of not having a reciprocity principle at all, we can potentially directly address these concerns by introducing proportionate compensation arrangements for data sharing. If you're sharing data, then you're compensated. Compensation might vary depending on how big you are, right? So it needs to be proportionate as well, so that you know, obviously smaller fintechs as well don't have to incur excessive costs when asking for data from bigger players. And yes, reciprocity increases the amount of consumer data in circulation, but if done right, the transition from open banking to open finance, it can also put consumers in the driver's seat, giving them new insights into how their data is being used. It essentially sheds light on the use of data that we know is already being used. So how do I think the UK might want to transition from open banking into open finance? Obviously, there are numerous challenges here in terms of regulatory architecture. Who should be the entities overseeing this transition, supervising the participants in the system, and so on and so forth? Who should be the entities participating in the system? What are the data sharing principles? There's all sorts of interesting questions that we can address, or that the UK can address, and that a number of jurisdictions have been addressing as they transition from open banking into open finance. But I'm concerned about reciprocity specifically. My proposal for reciprocity is that all regulated financial services providers above a certain threshold, and I came up with 2 million users, basically by looking at the number of users that the 9 biggest banks that are already included in the open banking framework have, as a proxy for who do we want to include, who should be required to participate in the system. But crucially, other entities, including non-regulated entities, while they wouldn't be required to participate, if they did want to participate, they would then need to be authorized, and they would need to share their own data back, potentially subject to a second threshold. So if you're very small, maybe you don't need to share data back, but after a certain threshold, then you become, so basically this would be a modified principle of reciprocity. It doesn't apply to every player in the system, but once you reach a certain critical size, then you need to start sharing data back. Participation would be incentivized through, again, proportionate compensation arrangements. Transition would take place through a staggered approach, kind of like Australia is doing it. So we would start with sort of traditional financial data, so balance, credit scores, that sort of thing. We could then potentially move to alternative financial data, things like rental, utility, and mobile phone payment data, and potentially even consider at some point, and with very strict rules, non-financial data with financial relevance, and thinking, for instance, about social media data. Obviously, advancing from one threshold to the other would require impact assessments covering consumer welfare, data privacy, technological infrastructure, and so on and so forth. That is especially true when we think about non-financial data with financial relevance, social media data, which is obviously very personal, which obviously has implications in terms of, I mean, many of these characteristics that we find in social media data are protected characteristics and so on and so forth. So it would need to happen in a staggered fashion and with appropriate impact assessments and appropriate rules in place. The expected consequences of my proposal would be that the balance would still be tipped in favor of smaller fintechs with less data, as they would have kind of an easier entry point into the system. The balance between banks and big techs, so either fintechs that increase in size or, you know, your Meta, your Apple, providing financial products and services, the balance between banks and these big techs would be somewhat restored. You would add increasing incentives for firms to compete on data analytics, as opposed to access to data, because all data is shared, right? So at this point, it's not about whether you can get more data and keep that data secret. If all data is shared, it's more about you developing better data analytic capabilities, which I think is a more interesting way forward. You would give consumers a better sense of which of their data is relevant and how it is being used. I think also that a principle of reciprocity could make a very important contribution to financial inclusion. Most financial inclusion initiatives are focused on the entry point into the system, whether you are banked or non-banked, how many people have bank accounts. But I think even in countries, and that's certainly the case in the UK, where most people, and I think it's the case in South Africa as well, where most people have bank accounts, financial inclusion doesn't stop there, right? Financial inclusion is also about useful, appropriate financial products and services. Open finance would help close inclusion gaps that still exist even after people are banked or become banked, right? So it's more about, I think, adding depth rather than breadth in terms of financial inclusion. It's not just about how many people are interacting and have bank accounts, but how are they interacting? Are they getting the appropriate products and services that allow them to use the financial system as a channel for economic prosperity, right? There are a couple of alternative proposals. So the EU has taken a slightly different route, so it doesn't have an explicit reciprocity principle, but it has been addressing the issues that can be addressed by a reciprocity principle through other means. So you have obviously the GDPR, which has a data portability right, that however doesn't have the technical or timing requirements that you would see in an open banking system or an open finance system. You have the Digital Markets Act that forces big techs to disclose some information, but the notion of gatekeepers at the heart of this act is quite narrow and serves a different purpose. So I don't think it's wholly appropriate. In terms of the proposed framework for financial data access, there have been discussions as to whether big tech gatekeepers should be excluded from the open finance framework, which would obviously address a series of issues that would also be addressed by a reciprocity principle. But I think this will have the effect of limiting the potential of the EU open finance framework, especially when it comes to access to alternative non-financial data and financial inclusion. So I think a reciprocity principle would be a better solution than what the EU is doing. So yeah, that's it. That's what I've been working on. I'm writing a paper on it. Hopefully I'll have a chance to talk to the FCA about it. I have some contacts at the FCA. I've been kind of in contact with them for the last couple of years about this project. So hopefully I'll try to find at least a way, a channel into policy making. But yeah, this is kind of where the stage at which the paper is at. If you have any questions, any comments, they would be very welcome. And thank you so much for bearing with me for the duration of the presentation.
Thank you very much. Very interesting indeed. Not that I am a banking or finance lawyer. I'm leaving that to my colleagues here in the front. From a South African context, I'm just wondering what will happen to papaya. We have just very draconian private information protection acts that I can see cause chaos in this. Questions, Vivian? Will we pick it up? I think it's the top ones now.
More complex actually is, I would be very interested in a bit of comparative work with you in this series. We are now practicing I'm part of the team, trying to draft as I told you, a policy financial treasury on open finance in South Africa. So there are a few contextual things that are interesting, and I know that speaking from financial inclusion perspective to come back. So I don't want to alter my for a few things. You are aware that we have a context model regulation, and which in theory works very well if everybody works together. And so what you also find is that within the context of the discussions of open finance, that you would have South African Reserve Bank, a very prudential authority having its own opinion on that, the fintech unit, that's not a full-fledged department, as its opinion, and then obviously they work very closely with our intergovernmental fintech work group, which consists of, in this space, about 7 different regulators, and then of course we've got the Financial Sector Conduct Authority, the FSCA, and what is interesting, just the point on financial inclusion to mention is that FSCA specifically has a regulatory objective around financial inclusion, but so does the coincidental, the secondary objective of the prudential authority. And it's very interesting when you have issues such as open finance, who then comes to the form as one entity, the major player. So I come to the payment system, national payment system department at South African Reserve Bank, and they've taken a very particular view around the data sharing around payments. So it's not just about the consumer sharing, what we were talking about reciprocity, but data can also be shared not only for financial inclusion, and you cannot just look at financial inclusion without understanding the trade-off with financial inclusion. So in a very corrupt country, we have to be concerned about the AML, CFP, and how this will it aid them? Will it actually assist with knowing what data is, and what is the data that shares actually used for other purposes? I mean, you mentioned cybersecurity, cybercrime, but sometimes it's not even your AML CFP, but you have your physical crimes from the cybercrime that could also be used for this. So I'm always grappling with this. How do you strike a balance between your financial inclusion policy and regulatory imperative versus financial integrity? And I can tell you, every time I come back to the same, either I look at different instruments, I come back to the same. That the trade-off currently in South Africa and also in our continent weighs heavier on the financial integrity side, even though financial inclusion is being used policy imperative across our continent. So that's more of a contextual comment. The question I have is, if I just look at South Africa, we've got a very highly concentrated banking system, traditionally almost monopolized, if I can't use that. If I can use that from a competition perspective, about 6 or 7 banks. And after some crisis, we lost that really middle tier, strong middle tier, a second tier of our banks. And so the question is, what these big banks having different legacy systems, how did you overcome the issues of interoperability between those systems? Because you can only share data that's compatible within the system. And that's going to be one of our issues as well with if we bring the rest of the players in the financial sector in, such as insurance and pension and funds, how are we going to look at those practical standards
So I'm very interested to learn from how you've gone about that.
Right, first of all, thank you so much for the comment. I think that's absolutely spot on. When it comes to financial inclusion and conflicting goals, I think the integrity it is you know, it is cybersecurity. It is also I think financial stability. Very often it's put into
It's a primary goal.
yeah, absolutely. Which and especially in the wake of the financial crisis, kind of everyone sort of was in broad agreement, right? That financial stability should be the goal. I think it's also interesting that in terms of regulatory objectives and in terms, especially when you think about different approaches by sort of different countries and who kind of commands the discourse on financial regulation, it is commanded by countries that have things like financial stability or integrity that give that much more weight than they do financial inclusion. And it is partly because they don't struggle as much with financial inclusion as other countries that have elevated financial inclusion to, you know, regulatory objective. And this is really important for us because they actually do have or might have, you know, 40% of unbanked, 40% unbanked population, right? So when we look at countries like the UK, right, where it's not that there isn't an issue with financial inclusion, but especially at the entry point level, you know, 98% of the UK population is banked. So, I mean, obviously there are issues with in rural areas, you know, lack of, maybe the networks aren't as satisfactory. Obviously we have an issue with younger people as well, and they're entering into the financial system. There's an issue with a sort of financial education, and then what happens once you are in the system, which I think is an area that is underexplored, but clearly it's less of a priority than in countries like Brazil or India, where you see all of these initiatives. But you also see how all of these initiatives, especially if they don't come coupled with things like financial education, can sometimes backfire. So that's very much my sense in previous visits to Brazil, is that, you know, everyone has, you know, you'll see immense poverty on the streets, right? Like you'll see, you know, you'll see homeless people asking for money, and they'll take card, right? Like they'll have contactless. There's so they are clearly included in this, right? So they have a bank account, they have access to the system, but they're severely misusing, or they haven't necessarily been educated to use that system. So I was talking to this person in Brazil that works for an ONG that deals exactly with matters of financial education, and you know, the fact that you might give support, for example, to a young adult that will use all the funding that they get. You know, they might use it on, you know, they might have a job for a year and enter into a contract to buy an iPhone, you know, a financing contract that lasts for 2 years, right? So there is an element of, yes, you're being given access to the system. Yes, you have all these initiatives in place, but you know, but there's also the matter of integrity and the matter of stability and financial inclusion without kind of having sort of this more holistic view of it. Like it's certainly a challenge. In terms of what the UK has done in terms of interoperability. So that's actually very interesting. One of the things that I've looked at recently, and I have a book chapter on it, compares the UK open banking system with the EU's open banking system. In the UK, the perspective was very much we need to get kind of the 9 biggest banks, we need to get them together, and they need to come up with standards that they all need to abide by, right? So, but there was this very significant emphasis on we need to make these systems sort of talk to each other, whereas in the EU that didn't happen. That was left to the market, and it never really came to pass, right? And that's why the EU open banking system never really took off. And as they're transitioning into open finance, they realize that they actually need this. But again, it's not quite clear how they are developing it. And it's partly a matter of size, right? With the UK, they sort of focus on these 9 banks. Obviously, the challenge with open finance is very significant, but I think there's general consensus at this point, both in the UK and in the EU, that you need to have this common language. And that probably this common, and my sense is that this common language needs to be sort of developed top down in close collaboration with the industry. But you can't just have kind of a generic, you need to figure it out. There actually needs to be sort of a concerted effort to come up with these. So I think the UK banking, open banking framework is a very interesting case study for that, because they did manage to pull that off. But again, limited scale, limited scope, but it might be something sort of, if you're just looking at South Africa, then that's might make sense to kind of look at the UK example and how they've done it.
It's quite interesting. Homeless people begging with yoga machines. That's, yeah. Churches, I think nowadays do something. Actually, I think that churches actually do take collection nowadays sometimes with yogas. But I haven't seen any of the people on the street having that available. But we might move that way. Good job.
Thank you so much. So I have one comment and then two questions. So the first comment is, like how you conceptualize the whole point of financial inclusion, please, like the UK is really about the depth of the financial services are not necessarily about right. Because I believe that this is how maybe financial inclusion is having almost like a uniform understanding and uniform conceptualization of financial inclusion. So I think looking from the perspective and in fact, financial inclusion within the context of the people, for example, technically not calling financial inclusion or calling something around financial, which is more than having better alternatives. Not because we don't have access, we really have access. Now being empowered better alternatives. So thank you so much for that very actually like. So now then the second point I wanted to make was really on how your approach to the threshold for the reciprocity. I did notice that it was a number issue, especially in terms of maybe scale, looking at the number of data subjects, so to say. So my curiosity was as to whether you consider other alternatives. Is it possible that you can have a particular participant in the scale that does not have quite a large number of data subjects that are used in terms of the number of relationships? But when you look at the scale of the data of those particular data subjects, it might exceed or the quality of the building, all those other indices might then also then exceed that of those that even in terms of the numerical perspective have the higher level. That was the first question. And then the second question is now also what I can call the ladder or the chain of the development of data sharing. So in a place like Nigeria, we started off with an open banking framework, which is somewhat what we have done. But in South Africa, the issues around first of all started with open banking discussions within the payment system. And there was like a position paper, presentation paper, but later on, the conversation then shifts to open finance, and then you have the the document around then recently the documents reference, which is one in the financial sector. So technically, there are three different documents in but the question essentially is, are there risks in just jumping, not really having works through and banking kind of system, and then just jumping to the so do you think it's better to start whether there are challenges that we have?
No, thank you. Thank you. Thank you very much for the comment, first of all, and thank you for the two questions as well. I might start with the second question. So one of the things that I think is important is to not think about sort of the transition from open banking into open financing to, potentially open data. It's not sort of, it's not as if one thing erases the other, right? You probably need to have all of these systems in place and running in parallel. Just in terms of scale, I think starting with open banking can be helpful in terms of, because the scope is more limited in terms of acquiring the expertise that you can then use to develop an open finance framework, which is much more unwieldy and which creates certain problems in terms of defining exactly the exact scope of the system and which entities should be included and who should be, what the regulatory architecture should be, and all of that. All of those problems are much more difficult if you think about an open finance framework. So I think the advantage of developing an open banking framework first is that you develop some of that expertise that you can then use to develop a much more complicated open finance framework. And I think the EU illustrates that perfectly. I don't think they did a particularly good job in terms of open banking, or rather they could have gone much further. And I think as they're transitioning into open finance, there are a series of lessons that they're taking on board, which I think are important. And it's interesting to see that the UK is still very much looking at its open banking experience and very much taking its time developing the open finance framework. And you see a lot of the kind of the lessons. So the fact that, for example, they want to have a specific entity, right, with representatives from in terms of regulatory architecture, right? You want representatives from the different supervisors. You want representatives from the competition market authority. You're listening. You're very much inviting the banks and the participating entities, or the entities that will feature in the system. You're inviting them into the conversation. The fact that the importance of uniform standards and interoperability is clearly a lesson from open banking and would work for open banking. So I think you can kind of see with the EU that they're doing a much better job because they're taking lessons, and you can see that the UK is taking its time partly because it's trying to make sure it learned the right lessons from its open banking system. So to answer the question, I think there is some advantage in starting small and then scaling it up, which doesn't mean starting small and then getting rid of the open banking framework and replacing it with an open finance framework. Obviously, all of this needs to happen, will happen at the same time. And there will be different specific challenges to each of these. But I think with open finance, it is by its own nature a bigger challenge. So maybe starting small can be helpful. In terms of the question of the number of users, I think that's one of the aspects that I'm still developing in the paper. I used a number of users, but it is a very crude proxy, and potentially what we want to have is kind of, especially if we have an entity that is responsible for the implementation of an open finance framework, potentially coming up with a series of criteria or factors that they can look at in addition to number of users in order to make the decision as to who is included and how is potentially a better solution, just having sort of number of users. I guess the downside of that is the lack of certainty potentially, right? With the number of users, it's sort of a straightforward criteria. But I take your point that it is a rather crude way of evaluating whether a participant should be subject to this reciprocity principle or not. It was partly inspired by how the UK kind of selected the original 9 banks that were subject to the open banking framework. So it's the largest 9 banks in terms of number of users. So it was inspired by that criteria, but I recognize that maybe we need something a little bit more granular. And I'd be very interested to hear also what your views are in terms of sort of additional criteria kind of that we could look at in addition to, I'm not a competition law expert, so that's definitely, I definitely lack expertise in that area, which I think would usefully feed into the paper. So I'm very open to suggestions as well. I kind of thought about number of users mostly, but by looking at kind of how the open banking system, open banking framework have come about. But I think that it might be interesting, and perhaps I'll also talk to a competition law colleague to see whether we can come up with other with other factors as well that this future entity should take into account when determining who should be included in the system and under what terms.
I think one other point
Apologies, colleagues. I hate to disrupt you, but I invite you to please continue the discussion outside. And for those who didn't dip much into the food is in Norwegian's office. Please go and help yourself. But please just ask your question outside, Precious. And sorry, guys and ladies and gents, and thank you very much for those who attended online. I see lots of our students. Welcome. Great to see you. Unfortunately, we've overstayed our welcome in the venue because the next group wants to move in and they've been throwing me signs from outside. So we need to just move the discussions outside, but please do, as long as Clara is available to
Absolutely.
to continue answering questions. And Clara, before we go off, sorry to catch your luggage, but just open.
Oh, thank you so much. Absolutely.
Thank you so much. It was very interesting. You can see they're still burning to ask more questions.
I'm so eager to continue the discussion. Thank you so much for the opportunity, and I hope we can continue the conversation detail in terms of
Yes.
potentially a partnership.
Yes, and our deal is always asking us, do you have any new links for us?
They're going to take the number.
Yeah, absolutely.
So yes.
So just take this.
The camera is certainly not working. Can you just, I need to take my stuff out. Thank you very much for those online. Sorry, we can't take any questions from you. We are being kicked out of the venue as we speak, but thanks for attending. Bye.